Well, hello members, LA here. This is December 22nd. It's the weekly report, December 20th. And this is the last report for the year. I will not be doing any more reports for the remainder of the year. So just an update to all the members. What's happening? You know, this report more is about not so much how we got where we are, a little bit of review of where we are, but mostly about where we're going. So let's focus, in the end of the year, it's always a good time to kind of review where you're at and where things are going. And so that's kind of what the ideal is here. Last week we saw continued push, right? It just continues to happen over and over, where this market just continues to melt higher, and you saw it last week pretty much across the board here. No let up, right? 2.25% on the NDX, 2% on the small caps, and the S&P was the laggard, but still over 1.5% higher. Only thing down, bonds. The TLT, the treasuries themselves. Now, bonds in general have been going higher, junk, all that stuff, people reaching for yield, but the treasuries themselves continue to be under pressure. You just visualize what that means, right? That means that the price is coming down, right? Which means the yield, the interest rate, is going up. And that interest rate is back up to a level it was, like a year ago. So, we're at that point where, something has to give, right? Either this thing really starts to take off, which itself is a problem because we have huge amounts of debt, or, it's going to come flipping back down. And how would that happen? Well, you have to have more buyers than sellers to make price go up, right? In terms of the TLT or the treasuries in general. And that means there has to be no more demand. Where's that demand going to come from? Well, it certainly doesn't seem to be coming from China. Doesn't be coming from Japan. Where's it going to come from? Well, Federal Reserve. It's where it has to, right? We have to monetize the debt. And so it's going to be curious to see if, in fact, that happens. That's kind of a side story, but that's what's happening there. Year-to-date gains, extraordinary. We've seen that before. We see it again. Let's talk about where we are and are going. It really seldom gets this good, right? This market has been on a tear. It doesn't happen all that often, but it does happen. Equity indexes, right? New highs. Other than the small caps, we're at new highs everywhere. And that's true not just here in the U.S., but that's true around the world, right? So if you look at the international developed, right, they look just like the Russell. They've broken out, trying to go back and hit their new highs. And that's true of the emerging. That's true of the developed. And so if we just quickly pull up those charts, I'll show you what I'm talking about. This is the developed, the broadest measure of it, right? You can see the breakout. You go to the monthly, you can see how it's broken out over these breakdown bars, now trying to lift up into the highs. If you go to the emerging markets, exact same story. It's broken out, right? Here's the breakout this week. And again, breaking out on a monthly, breaking 2 swing point highs. What's it going to do? It's going to try to go back to the highs. And then, of course, if you look at just the U.S. market, or the broad developed here, breakouts all the way around the board and a continuation to the highs. And so what you see is markets around the world, right, working higher. And we can talk about why, or we can speculate about why. But this particular video, we're just going to talk about what is. And I'm not going to worry about the why. I've talked about why until I'm blue in the face. It doesn't matter. What matters is what this market's doing. Now, the other thing the market's doing is the market is working higher across all of its sectors, right? So if we look at the sectors, and we can look at each and every one of these, but, in general, other than just a few, right? You got bearish, sideways up there. Here's a sideways and a sideways. Other than that, it's bullish everywhere, right? All the major sectors, bullish. Now, are they extended? That's the next question you always ask yourself. Well, yeah, in some cases they are on the short term. Financials, technology, healthcare, right? These are extended. That means that this big push that we're on right now can get a pullback, right? Some sort of a knee jerk down to where these things change, right? And so we flip them to sideways, and then, right, we get some sort of a continuation. And so it's kind of the momentary weakness I like to talk about that leads us to something higher. And why do I say higher? Well, because the charts show us that. And if we go to the weekly, which is this column, right, over here, if we look at these, like here's the financials, right, the big three, the technology and the healthcare. What are the big three doing? They're in their 50 percentile. What does that mean? Well, that means that they can go higher, right? Pull it up. Take this one. I'll just take, and I've got the S&P 500 up. If I click on that number, right, that gives me the MTTF projections. So where does it get the nosebleed? Well, it's already on the short term into the nosebleed area, or getting there, right? Could go up to about 80. So what is that? That's 8 more sessions. So 8 more days. What is that? New year, right? So somewhere around the first week, second week of January, you know, if we extend that far, which we probably will, we could get some sort of a pullback. Now go to the the weekly. It's a 51, right? The value. You know, nosebleed is up in the 70s and 80s. So let's just take the 80 number. That's a 48. And where we're at now, 25. So that's another 23 bars. In other words, we're only about halfway there to get to real nosebleeds. 23 bars, you know, just call it 20. 20 bars is what? It's about 5 months. That takes us up into May, April, May. And so if you're looking at just MTTFs as a guide, what they're telling you is that this market can continue, right? It doesn't have to stop here. And if you take and look at the index itself, you can see this is sort of nosebleed already, right? You know, I've said before, and I'll remind you here, right? When you see swing point highs print on the way up, that says that the market's, you know, kind of a normal market, right? But when you don't hardly see any, right, that's a very strong market. That's an extremely strong market. It can never print a swing point high on the way up. In other words, it just keeps making new highs over and over and over. That is an extremely strong market. That's what we have. You know, this thing, if and when it pulls back, you got to retest, regen here, it'd be more than 6 bars, right? In other words, it will get bought. And so even a retrace now is going to get bought. And that's just on the short term. Go to the intermediate term. You know, it's going to get bought over here too, right? This is the breakout more than 6 bars as well. And so you've got this long, strong move. It isn't going to end easily. And so you have to expect it's going to continue the upside. And that's what this chart is telling you. Now, short term, right? You know, the things that have been driving the market stretch. That's what we just talked about. Intermediate term, they got farther to run. April, May is probably the time period that we should probably be concerned about as we move forward. Now, in a different vein, right, we can look at this breakout extension on a weekly chart, and we can compare it to previous ones. And so, in other words, if I come in here and pull up the weekly on the S&P 500, and if I look at this move up, right, we got one little hiccup here, but it really extended up to there, right? If you look at that, what is that? That's about 20 weeks that this thing moved higher. So we're roughly 20 weeks moving higher before we get some sort of a decent setback, and even after that, it makes new highs. So on a weekly basis, we should expect something similar, right? Which means here you could get about 20 bars. How far are we now? Well, we're about 12. And how far have we gone? Back here, this was about 25%, right? This move. We're about 12.5 now. So we're about halfway through this particular move. So in other words, going back to what we were just talking about, we could be setting up for this on a short-term basis, right? Some sort of a little jostle to the downside, and then a continuation to the upside. And that, I expect, is probably what's going to try and play out. If we look at this in yet another way, let's go to the monthly chart. If you go back here, remember 2016 was the last time we had a big move to the downside. We had that sideways stuff that took place back there. But if you take this and pull it up to the highs, there we had a leg up that was about 23 months. right? That leg up was about almost 2 years, right? And how much did it go? It was about 47%, I think. Somewhere around 47%, that leg. Where are we now? Well, if we bring it over here and we look at this and we look at where we're at now, again, we're not quite halfway, but we're getting there. We're about 12 months, right? So we're halfway in terms of time, but in terms of price, right, this has already got a 37% gain. And so if you just look at these on a monthly basis, right, this can go on for a while longer. How long? On a monthly basis, could go another 10, 11, 12 months. So we could be the end of next year before this thing sells off on a long-term time frame. So again, strong market, you know, just looking at simple projections based on current and past history says that this thing could go farther. And if we want to look at it one other way, you know, one of the mentors is kind enough to share this data with us. He's keeping track of the weighted trends. And let me try to get this centered so you can see it. I guess we can more or less see it there. If you look at it this way, what this chart is showing is that when you get up to about the 60 percentile, and so we're looking at weighted S&P bullish trends, and we're looking across, you know, the 500 plus stocks that make up the S&P 500 and saying what is their trend. When most of them are bullish, right, that's when you start to see, what are you going to continue to buy, right? It's not like you can keep rotating that money because a lot of this happens with rotation. So you get up to the more extreme examples, you usually get some sort of a sell down. Now, that sell down can be one of two things, right? You can sell down in terms of time, or you can sell down in terms of price. So in other words, you know, if you imagine, let me just draw it this way, if you imagine the majority of the stocks moving higher and then they settle down and then they come up and they set a swing point low here and then they come down and break it, right? That's when these things, and it doesn't have to be a large move to the downside, right? It can be 3-4%, but that's when these things would turn and come back down because your trends would change. And so until they get there and start changing, though, they're going up, and that's what's been happening, right? This big thing off of these lows back at the beginning of last year, and so the trend changed all the way up. We're almost to that point where we're getting into kind of a danger zone, right? Certainly an area that you start thinking about, well, we might be topping out. But look, if you go back to the major tops, right, they're way up here, right? So in other words, this thing could climb way up to this area before it gave it up. If that's true, right, if it does that instead of some major turn before that, that would also overlap what we just talked about in these other areas, both in terms of MTTFs, in terms of just simple extensions based on what we've seen in the past. And so again, heading up to a level that says, hey, we could get a setback, but then again, right, this is not perfect timing. We're looking at weekly charts here. Could take longer. What's the bottom line, right? Strength begets more strength, folks. You know, when markets are strong, it's hard to turn them. And that's what this market is. It's very strong, and it doesn't matter until it does. You can take all the concerns out there, and there's many of them, you know, whatever they are, for whatever reason, they keep getting postponed, right? They don't matter right now. Is there anything to be concerned with? If it is, to me, it's the pace, right? Because we've been going along like this. Now we're starting to go like this. And the vertical stuff is what usually gets some sort of a setback on a short-term basis, and I expect that's probably what's setting up. We're getting a faster melt to the top side. Overall, though, this market's in great shape, and given the previous discussion, right, in terms of those extensions, in terms of the MTTFs, in terms of the weighted trends, all of that stuff, right? Given all that, right, we could see some volatility before long, but we could get another half of this leg, another 10-20% to the top side. And so the expectations right now look like April or May as being the key period for some sort of a larger setback going forward. fundamentally, right, the data still mixed at best. It's not getting that much better. Almost nothing coming out this next week. Something on Monday. Got a short day on Tuesday, closed on Wednesday. Dead days probably Thursday, Friday. Next week, same period, same sort of a thing. And then first and second next week, second and third next week, it'd be Thursday and Friday, will actually get going again with this market. And I wouldn't be surprised to see a continuation of the melt, even that first couple of days. Last week, well, pretty much, to the top side, right? That's kind of what we've been saying. It was even better. We expected best case 32.10, got to 32.25. This thing wiped out a couple more projections. If we look at this week, best case is another percent or so to the top side. Ideal case or expected case is knocking off another swing point, not swing point, but a projection that we have that's out there. And so you can see those numbers down here. And then the worst case, I just think you fill the gap. This market's not going to sell off right now. Big volume last week, of course, expiry, options expiries, the quad witching happens every year this time of year. So nothing special there either. Folks, have yourself a great holidays. I'll see you at the turn of the year. Until then, take care. I'll see you next time.